Hello trader, welcome back to Forex Black Box. Another video. Today is Wednesday, the 17th of June, 2020. And sorry, the mic just pushed the mic off. Anyway, so I'm looking at S&P 500 now on the daily. We have a nice pattern here. I'm looking for continuation down here for a major move, as I talked about it yesterday. And kind of like yesterday and today confirm where we're going from here. There is a pattern, there's a trend line matching with this one here. If I grab my tools and I get this point to this point, you see that it's kind of like a border or a trend line matching with this angle. Because normally the market does that all the time. Is everything is calculated by Fibonacci and all stuff. So we have a rejection here. That day we have a rejection, and the following day today we see that we respected the trend line and we go in bearish. Yesterday I talked about I like this candle to go down, but looks like we're going to take some time to achieve that. So today looks like great. If that stay that way, probably the following day, possibly we're going to retest that again and we'll continue down momentum. Okay, so S&P 500 looks bearish, and what that mean? We're going to look across what we can do with it. So we have gold here. Test again the 20 moving average on the daily, respecting that trend line. If we keep an eye on this trend line, has been tested many times. If we make a copy, kind of reject it down here, failure to break lower, come back up, test the trend line, and come back again, and we'll kind of have a 1-2. I'm looking for 3 to break through. So if it's not today, probably it's going to be tomorrow when S&P 500 start to move down. Probably going to see gold break through up and probably another pullback here before we continue up. So overall, we're looking for what we're looking at. There is a pattern here, retest 61%, and we stalled here. So what we're looking for again, guys, we're looking for breakout, retest, and continue. Your sand line in the sand, this one here. If we broke, come back and retest the high of the previous candle, we'll continue back up. It will be a great opportunity from here to there. Okay, don't stay long in the market because market is unstable. As you can see that we are kind of like waving here, so keep your eye on that. Don't stay too long in the trade. Make your trade short and sweet. Bitcoin looking similar here. We're looking for area to start to make a decision of. We have a trend line 1. Let's see if that's going to actually be trend line 2. Okay, since we broke below that level, broke below the previous day, looks like this is confirmed, and that's where we try to break out through, but we have a failure. So what I'm looking for a pullback, and we'll start go down slowly. Okay, if we break out of this trend line, then possibly we're going to retest the second trend line, and from there we'll see the momentum start feeding away to the bottom. But if it's not, we should see more seller than buyer in the lower time frame. As you can see that in the 5 minute I'm looking at, we have a failure, come back, close up below this level, and the closes, and even the previous will close below there and will continue down, and now we are below this level. We're way below it. So this is the previous day, I believe. Yeah, I think so. That's the previous day. Not sure. But anyway, we broke below the previous day by a few. So probably the previous day is just somewhere back there. Let me see if I can get it. Here you go. That's the previous day. And we broke below it and we come back up, bull back. Guess what? We touched the 20 moving average and we start reacting. Something, guys, to keep in mind, do not open trade away from the moving average unless you want to come the trade, your direction of your trade is going back to the moving average. Always open trade when he's leaving the moving average, not away from the moving average, you're against it. For example, if you short and start to leave the moving average, that's your entry. You exit and you wait for another chance. Here you go, another one. Leaving the moving average, you enter here and you take your profit. You wait, come into the moving average. It doesn't show you that it doesn't want to go up again. Start consolidating here and start leaving. You enter here below this one. You've been targeting maybe this level. There's a lot to it. It's not only one rule. You see that? You have to look back there, leaving the moving average. You trade below the candle is breaking away from the moving average, and that's where you trade. Your stop loss should be above the previous high. on the 5 minute and it's going down. If you go to the bigger time frame, 4 hours, leaving the moving average here, see that leaving the moving average, and you go to the low time frame to confirm that's actually leaving the moving average, and you take your trade, you should be here or around this level, which indeed. Why? Because this is the swing high and it's going to act as a support. There you go. Come back to your moving average. Then if you wait for another chance to go back down, it didn't give you the chance, consolidate. It's like a 5 minute I showed you earlier, and we'll see some more momentum down, come back to this level again, probably hold, come back here and continue down. There's so much to it. It's not only one tool you use. You should use all the available history, like here, right there. See that? We stalled here, we broke through, we tried to break high, we couldn't, come back. The momentum started getting smaller. Okay. So as you can see here, that we try to break higher, we failure, we come back down, and now we have another failure, we come back up. Let's see where we're going to go from here. If I tell you that it's going to go down, it doesn't mean it's going to go down. The whole trader, they don't hear me saying that. The whole word together, there has to be in balance. Seller more than buyer, buyer more than seller, and then where the market will go. And this piece of market, this piece of asset like Bitcoin, connected to the whole market altogether. It's not only one asset to move the market, it has to be a group. So if you break down the whole market altogether, it has to be buy and seller, risk on, risk off. If it's risk on, then everyone will understand that's risk on and they will start to sell their assets and try to be risk on if they're trading on the sentiment of risk off. Okay. Okay, oil. Today it was an inventory of oil. I didn't really check it. I don't trade oil myself, but looks like we have a push, 20 moving average respected around support level as well. And we're coming back 50% now from this momentum, more than 50%. Let's see if it's going to do that, continue back down to the next support, or it's going to stay above the 20 moving average. As long as it's above 20 moving average, you're still long, sinking long, okay? If you come near here and start to show the low time frame that's want to come back up, you take your chances, leave your stop loss below there. That's how we trade high probability trade. Above the moving average is always buy, below the moving average is always sell. Here is one, here is two, and he's just showing you that it's breaking through. That's another level. If you're only following the moving average, that's another level to show you small momentum inside plus what stock market does. Here we go, come back down, and now we broke through, stronger momentum up, come back, give you breakout, you long again. You don't have to wait for the moving average to be tested. As I said, this comes with experience, and when you see that smaller bull flag, you see that is actually this one equal this one almost. Okay, there's a bull flag here right in the middle. Probably that's the neckline. If we come back retest this again, probably see some bounce here, and that's where you will see the moving average how reacting to it. Okay, imagine that's the moving average coming back down, and the price touch it once, come back down, touch it twice, fill it to break lower, then start to come back up. That's when you change your sentiment of trading. Guys, if you're new to the channel, thanks very much for everyone joining the channel. You're supporting it, great. And if you're new, please subscribe, like, and leave a comment, and put the notification button active so you can receive my videos and live stream. Also, I stopped to do live stream because I'm busy trading at the same time, but I'm looking for the time to do it. And live stream, maybe I will do it once a month. If you have any questions, so I will be talking about that during my videos. I will be set a date and time to do live stream. So if you have any question, prepare it for to ask me. If you want to ask me directly, just send me a direct message, DM me. Um, Dollar index, you see that will break out of here as I expected. We have a small flag here coming back up on the daily, so my expectation to be here, and we should see momentum back down again and come back up to breakthrough. As you see that we have consolidation area level, and that is going to be very strong support. So probably we're going to come back here, try to do feeding away and try to come back again to break this through. That all to do with S&P 500, guys. So you keep your eye on it. If S&P 500 going down, this is going to go up. Vice versa as well. So if this is S&P 500 going up, this is going to go down. This is strong down momentum coming back up. My expectation 20 moving average will react as a dynamic support for the price to go more lower. So that's why I'm talking about that only. And I was short euro pound, sorry, euro dollar, and I exit just five minute prior the stream now. So today is this time now is a 4:45 p.m. London time as well. So I exit my positions. I only have one position on pound Aussie. I because I expected pound Aussie to go up because it's holding this level very nice. But we just broke below it. We'll go to it anyway. We will have a look at it as well. Here you go. I just say exit just break below this line the previous day. I know that's going to break by a few, then you hold. Probably next day we're going to see some pullback and we'll continue down. What we're looking for here is continuation to the 20 moving average. Then we'll see whether or not it's going to be supported. If it does support it, we expect another wave similar to this one, two, three, four, five. Then from five, probably going to back to 20 moving average, and from there we will start to see another big pullback on the bigger time frame. Like if you go one weekly, that week probably going to go down a little bit more, and we were far away from the 20 moving average. But you know that was your good trade here above this level. That was a good trade to enter, and another one to enter. And you see that is rejected. The price is rejected here. On the weekly even time frame is more beautiful trade long term. If you short, normally pound, euro USD, it doesn't take much of swaps. Is very low, so that's you be a very good trade. So broke the previous week as well low, and now descending probably around the moving average on a daily 20 moving average, then probably come back and continue back down to continue to retouch the 20 moving average. You see that price always close the 20 moving average. If it got far away from it, come back to it. Get far away from it, come back to it, so on and so forth. Come back up strongly, reject it, come back down to it, away from it, and so on and so forth. You have to do your homework. This is not easy job. Okay, this career is not easy. It's so stressful, and to make it easy, you need to understand A to Z. How is everything moving? How to make your plan? How to lay your plan around? How to use your plan every single day? And practice, practice, practice will become easier. Just like driving or a pilot, how many hours they're practicing. Same perspective, guys. Okay. Look on the daily array. So I expect that to come back down to the moving 20 moving average, which is could be around the 11. At the 12 we are now 0.12. We're looking to go below the 12 marker. So yeah, stay tuned for that. Look in bearish momentum, but don't forget that we have a bullish momentum at first. A, B, C, then 3, 4 probably is going to be doing that. Then we'll break out 5. Maybe we'll try again. I will continue back down. That's the Elliott wave perspective. We'll break out of here nicely, come back, retest the breakout, and we'll continue back up strong momentum. Okay. If you do that every single day, you go around and you start your story, tell the story of the market. Okay, we'll break out from here, come back, retesting, and we'll continue back up. Rejection, and that's wave 4. Break out of wave 4, we're looking for wave 5. It's not going to be very long, probably will come back down again. Okay, if you practice that every day on every single asset or pairs, you will get the habit. As soon as you look at it, you will know where you started, what the story is, and you can read between the prices online and the lines as well. Okay, uh, cable, same following. So far we went down here. Don't forget the big move from the bottom to the top, sideways, breakout. That could be the wave 5, and we're coming back down inside the range again. We've been rejected up there. Don't forget tomorrow it's the interest rate. So the interest rate is tomorrow, and stay tuned for that. We're looking bearish overall one day before the interest rate, but don't forget that's the dollar strength, not the pound weakness. And if we hold the 20 moving average on the daily, possibly we could see some momentum back up if the interest rate is in line with pound strength. Okay, so if you're in trade now with pound, just try to close everything, stay on the side until you see the new direction. Okay, so far it went up, come back down, and we started making waves here. If we break below that, that's continuation down. Very much indeed, we'll break out of here. We'll have a nice run up there. Now we're coming back down to retest this breakout. So that's your line here as well. I would like to boot one as well, one line here. So let's see, 22 or 23. Okay, I don't look to the price, I look to the candlestick. I'm targeting this candlestick. It doesn't matter what the price is, but looks like we're coming down to this point that will confirm if we close below the 20 moving average, for example, today, retested the moving average and we'll start descending down. Okay, pound yen as well. I'm exit of pound yen as well today. I did exit it today. Just exit pound and euro together because I think S&P 500 would like to do some pullbacks. We're looking like we have a break down here to this level. Look like it's been supported. We have about 50% and coming back down now. Let's see whether or not it's going to be supported here. So we're below the 20 moving average, indicating that yen is strong. If you look to all yen pairs, compare it with the moving average, you will see that is actually pushing down. So we have a nice run up. Now we're coming back down, collapsing because of the stock. Stock weak, yen becomes strong. Yen, dollar, gold, Swiss are safe haven. They go up in price. The other one that go down in price, Aussie, New Zealand, Euro, and pound probably because of dollar strings. Okay, dollar becomes strong when the stock going down because everyone liquidate their assets and they convert it to cash or they buy something else with it. Most likely in these days it's going to be cash because of what's going on around. There is no any solid asset at the moment. You only trade very small time frames. Don't go big. Don't go monthly and stay around. So you see that we almost touched 20 moving average. See some weakness here. I was talking about that day. I was long about here and I exit my positions and I re-enter one right there. So let's see that if it's going to work out today or not. My stop loss just below this day, and if it's going to go through it, it's okay. I already have my daily profit target, so I will still have a good hope for this one is going to go up because of the stock going down. There's not only hope because I know the stock is look like bearish momentum is building up, plus Aussie is holding this level very nicely. Okay, we need to look for a breakout. I like to see a full green candle coming up maybe tomorrow. If interest rate is great, then that will indicate Aussie weakness. Then we will see whether or not we'll continue back up for momentum ups and downs. Okay, that's my main target. That's a medium target. So from the moment we come here, we're probably going to see a nice big pullback. If the market do that, come back up, probably see some pullback here before we continue back up. Okay, we're below that trend line as well, big trend line here. As you can see previously, it did all this noise. It's not a noise, but it's price action. If you trade in low time frame, this pair move crazy, move a lot of pips. If you know how to trade this only and put all your focus and your energy on pound Aussie, you don't need anything else. Okay, because it's really really strong there. But there's another angle is to spread your risk across. If one failure, you have another pair working on. But if you trade that solely just every single day, you don't need anything else if you trade it with a small risk. But I know human, they always like to risk more because they want to make more money. Okay, but you see that's moving a lot. Let me put 5 lot, 10 lots is not practical. Okay, it's just delusion. You think you're gonna make money, but if you go against you, will wipe your account in a matter of 200 pips, which happen very quickly on these pairs. Okay, for example, today, let me give you a quick example, guys. The high to the low, 178 pips. Okay, the day when it went up 240 pips in one day. From that breakout to low, almost 1,000 pips, 900 pips, 1,000 pips from the breakout only. Imagine you if you traded a 20 moving average, 1, 2, 3, 4, 5 days, you made 500 pips 1 week. If you're lucky enough to enter here, you exit there at the bottom. 1 week, you made 500 pips on one pair only. Okay, so that's why you do your back testing is very important. That's why back testing is very important to see how much is pair move and what the connection to this pair. There is a plugin to it. The plugin in the market for how Aussie behaving overall, forexing, sorry, Aussie index itself, and how dollar behaving overall. All this plugin connected together. Everything is connected as a plugin from the future to stock all the way to forex and options, all connected. Everything is connected together, and if it's one big reaction like S&P 500 going up, then Aussie will take bid on. So since you get this information, then you see where we are. Aussie pairs, where are they? They already moved very nicely down, about 2,000 point pips, sorry, 2,000 pips, maybe over 2,000 pips. So you see what we're looking for now. We're looking for hold a ground, weakness of S&P 500, a good support level, and show weakness on Aussie across. Then you take your trade at the breakout. Okay, I did take my trade on breakout, look like a failure, but I'm putting my stop loss just below there. I don't think we'll see it anymore this level, but no one knows what's going to happen. There's a high probability trade to go back up at least to this level one, halfway, and two. Okay, it's all to do with high probability trade. No gambling. I'm not gambling, but I know that it could very much indeed jump from here, from the breakout point, which we are, and another one here. Just aiming for this one. If you go below it, then I'm out. Didn't lose much. I lost what percentage I put on it. Every time touches one moving average go down, that's the second leg going down. Let's see whether or not it's going to hold or not. I have a small trade here. I exit my big ones. I just put a small one, like 25% overall from this trade, from for this pair, and we'll see. If it work out, great. If it doesn't, it's okay. Losses is always in the back of my head, but I think maybe because I know that before they go up, they just exhausted move down before they actually go up. If I break out, I will be exiting here instead of waiting and take the whole risk if they want to do that. If they don't, probably going to go lower, so I don't want to hold a losing trade. Okay, it's not a good deal for me. Pound New Zealand, same story. We're at the bottom now. I'm not trading this at all. It touched the moving average near. It didn't really come to the 20 moving average yet, so the trend is still down momentum. I like to see that test the 20 moving average first, pull back, give me higher low, then from there I will be happily taking it long or sideways. For now I'll play the sideways as well until it's breakout. Okay, CAD. So we see that CAD come back up down. What we see here, wave one, wave two, 1 2, nice level. That's a very interesting level to see one more momentum up or at least measure move. Okay, that's the line where we can enter, exit on. We're near the 20 moving average. We're below it now. We were above it. It was a great one. We're below it now. Let's see if it's going to do that one more time. If it does and successful, then we'll continue with it. If it doesn't and come back down again, then I'm not in this trade. Okay. Okay, guys, this is it. Thanks very much for being here, and thanks for your support. Please subscribe and like and leave a comment if you're new to the channel. And I'm doing that every day, uploading video to tell you how did I do, where the market can possibly go. I don't have the crystal ball here, but I have a knowledge, and I've been doing that for 8 years plus now. And I see that it's a very good, interesting opportunity for to make money, but wisely, not randomly. Okay. Thanks, guys. Take care. Have a great day. I'll talk to you tomorrow. Take care. Bye.